Let's continue with the markets now, and local trade poised for a positive session today after the decent performance yesterday. The rand firming to the best level in more than a month on Wednesday, while the JSE edged higher, with investors on tenterhooks about the U.S. federal market, or should I say the U.S. Federal Reserve, opening the market committee statement on interest rates. Remember that the decision there is that the U.S. Federal Reserve has left interest rates unchanged. So let's speak now to the Chief Investment Officer at Makwe Fund Managers, Makwe Masilela. Mr. Masilela, thank you very much for your time and indeed your patience while we concluded that interview with Mr. Ramatlakane. Let's quickly get your sense of how the local markets are faring this morning and what factors are driving trade.
Unfortunately, we opened in a negative. And as you said in our intro, I think after that hawkish statement that we got yesterday from the U.S. Fed, markets are caught in a conundrum because, remember, stocks have been going up. Now we ask ourselves, how do we continue to have exposure to those equities and at the same time trying to guard against the possible upheavals when it comes to rate increases going forward? And China didn't help the situation because their industrial and their retail sales numbers missed estimates, and their youth unemployment continued to go up. So markets unfortunately had to open negative.
Yeah, let's touch on the National Bureau of Statistics. Now, the unemployment rate for the Chinese is between the ages of 16 and 24. That rose to 20.8%, up from what it was already a record 20.4% back in April. It looks like South Africa isn't the only BRICS nation that is trying to navigate this bottleneck of unemployment.
Definitely, they've got an issue that they have to deal with. But if you compare us with them, ours is almost double because we're sitting at 46.5%. And all for the same reasons. The economy is not doing that great. Remember, the guys are coming out of harsh lockdowns and they started to reopen the economy in December. But unfortunately, so far, we've been seen some uneven recovery when it comes to the economy. And maybe that also explains why people are continuing to expect that the guys, they have to come with a broad stimulus package to try to help the economy. And back home here, we've got the very same issues that our economy is not doing great at all. And we get the likes of load shedding, which gets to exacerbate our situation. So this is something that really needs serious attention, and I think structural reforms, that's the way to go to make sure that you create that kind of environment where people will be able to create the necessary jobs for the youth.
Yeah, all right. So in the beginning of this conversation, we spoke about the U.S. Federal Reserve, which left the interest rates unchanged. Let's then look ahead and understand what investors are preparing for as the European Central Bank is going to make its monetary policy decision today. Your expectation from that data, and what clues might it give us when it comes to the trajectory of inflation, the world economy, and future interest rates globally?
We know that inflation continues to be at elevated levels globally. We know that the European economy continues to struggle, but the European Central Bank, just like other central bankers, are adamant that their number one enemy is to fight this inflation, and even if it has to happen at the expense of having the economies not being able to grow, that's okay with them. Hence, we expect that as much as the European economy is not doing that great, definitely they will increase by 25 basis points today, and with us as well going forward is very clear, and as well as the statement from the Fed that yes, we have managed to skip, because the Fed didn't pause, because they skipped this month, then they expect to increase again probably 2 times before the end of this year. So all I'm trying to get to is that given that inflation continues to be at elevated levels, we expect the European Central Bank to increase, the Fed to come back as well, July or so, to increase, and also back home here to continue to expect to see interest rates going up, because the guys, even if that might tip economies into a recession, they're happy with that as long as they fight the monster called inflation.
Yeah, let's conclude the conversation with company news. PPC publishing its trading statement and operational update for the 12 months, which ended on the 31st of March 2023. How are their numbers looking?
Continue to be a challenging environment for them, but the guys continue to be positive, to generate a positive cash going forward, and also manage to reduce their debt. And also the guys, they've got a decent balance sheet. Their financial position is strong enough to help them to navigate all the economic challenges. And yes, we know that they're banking on this whole thing of the government infrastructure program that will help them. And also, they expect the government to protect the industry by imposing some tariffs. And unfortunately, volumes were low, but the guys going forward, they're looking to increase prices at least biannually in order to improve their profit margins. But we've seen their losses improving by 38%, meaning previously they had 13 cents per share loss, and now they only record 8 cents per share losses.
Makwe Masilela is Chief Investment Officer at Makwe Fund Managers. Let me thank you very much for that markets update. And indeed, once again, thank you for your patience.